Hey, market chameleons and the biggest chameleon of all, Dmitry there. Thanks for joining us for today's show. How you doing, Dmitry?
Good morning, everybody. Good morning, Will. Pretty good. So this will be like our second pre-market show. I think yesterday was pretty good. We had a lot of people interaction. So I'm excited yet to do today's show.
Yeah, a lot of great feedback. Before we get started, everyone, let me share my screen real quick. Dima, can you see that?
Yeah.
You want to give everyone the disclaimer?
Yeah, so everybody, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need help or you should seek the advice of a professional or call your broker. There's the disclaimer.
Yeah, and what we're doing is showing you how we use the chameleon here. That's what we're showing you.
Yeah.
All right, Dima.
Let's get started.
What do you see this morning?
Okay. Do you see my screen still, Will?
I'm still just seeing your beautiful face.
All right. Thank you. All right. Let me just switch to my screen. Let me know if you see it.
Hey, before you get started, everyone, any questions you have, comments, put them in the chat. I'll get them to Dmitry when I can. And also make sure you register, subscribe to our YouTube channel. It's a big help.
Yep, right. And you guys get alerted anytime we do a live show. You got YouTube usually will send out an alert this way. You know when we're live.
They do.
Okay. So I'm going to start with the pre-market report to see what's moving today in the markets. And you know, as you can see here, these are our top gainers in the pre-markets, top decliners. We've got like way more decliners today than advancers. And a couple interesting ones that I just started to kind of look over early in the morning. One came up was DELL. It's up 10% here. And this one is, and DELL just issued a press release that they're going to do some kind of a spin-off. I didn't go deep into that spin-off, but one thing to look out for, I know in our market making days, sometimes you get an opportunity depending on the terms of the spin-off. So watch out for a lot of options activity, especially in deep in the money puts, because if they structure in a way where you get to elect to get something, or if there's like a default in there, that's when the opportunity can exist for a carry trade. So I don't know all the details, but what I would do is first look out if there's a lot of puts trading in DELL Computer, because like I said, that could offer an opportunity for a carry trade if you get to elect participation in that spinoff. So
you just mentioned a lot of puts trading. Could you just walk through? Someone's asking, how do you actually see if puts are trading? Just use yesterday as an example. I know there's nothing trading right now.
Yeah, so let me just, you know what, let me open up another tab here. So obviously we haven't opened yet in DELL, so there's nothing to show from today's activity, but I would just go to the DELL options chain, and the easiest way to look at is if you're on that options chain, you're going to get all the, see over here, these are the expirations over here, you see the volume. So in July 17th, yesterday, 984, August 21st, 300. Not a lot. It's been trading yesterday, but if you see a big volume here, and of course you could just click on that expiration and you see the volume here in the puts. That's where it is in the calls here. If you see very big volume there, maybe it's worth just taking a look at what the terms of those spin-off is. Like I said, you know, that could create, in our market making days, I know that could create a certain opportunity, because what will happen is that you'll get a choice of participating in a spinoff, or there might be like a default if you do nothing. So usually, you know, people who participate could potentially have a little bit more value in it than the people who take the default. Again, I don't know the terms of it, but I would start looking at that activity after the market's open. Maybe there's nothing there, but that's just one indicator to start looking at the terms. I'm going to come back to this pre-market report here. So the other one that popped out, I was looking at it early in the morning, is like, here's this ACIU. I saw that was up 61% on news about a vaccine study. So I'm just going to look at this one. I didn't, I'm not interpreting that news or what that vaccine actually means. I'm just going to look at it from a historical perspective. What usually happened to this stock after it experienced a very large gap move? So I clicked on that. Let's just go down here and see. So here we see these are the news here. You see it's up big on advancement of an Alzheimer's vaccine study. Down here we just see minute by minute how it's been trading, and you can see here, that it's got a big standard deviation minute to minute in that pre-market. Another thing is the concentration so far. A lot of the volume's been around $11.23, $11.80. And here's that pre-market low and high, 778, 1489. So you can see it had a really wide range here. Very liquid. Let's see what happened historically after it's experienced like big gap moves up. So you could see here on average, this is the biggest gap moves up in the last 3 years. We filtered those out to see, well, what happened next. So you can see on average that gap move up has been 7.7%, but we do see here's a big one, 20%, here's a 13%. That compares today at 57%. So we haven't seen that in the last 3 years. We also here, the drift, it's really 50-50. Half the times after the opening, it continued to go higher. Half the time it went lower. So nothing really there. And there's a little bit more bias from the open to the high. We see an average 6.8% increase versus the low of 5.7% decrease from that open to the low. So that's just one way to look at the historical return distribution after a big gap move in this stock. Of course, some of these were related to potentially just the overall market going up, and then we do see that some of these were catalyst moves due to a company press release over here. So this one, here's a press release, company press release. It was up 20%. By the end of the day, it held that opening gap and moved a little bit higher, although you could see during that day it was pretty volatile, lost as much as 11% of that gain before recovering. Let me get then to another one. I know Twitter was in the news. I think Twitter announced that they had some breach. Is that right, Will?
Oh, the breaches were crazy. Bezos was offering free Bitcoins if you sent him Bitcoins. Biden was doing the same. I mean, there were actually transactions taking place. It was crazy.
So I'm going to just filter out, stocks that had a market cap of 10 billion or more, just to see if we could find Twitter on here. So I see Twitter here. Right now it's down 4.2%. So let's just take a look historically, the price action activity after it's had a gap down move in the morning. So we see here that in the last 3 years, these are the biggest down gap moves. This excludes earnings gap moves because this isn't an earnings situation. So on average, we see that those gap moves were down 5.6%. We see here's another one, 12.3%, as high as 12.3%. Historically, when we see these gap moves, we see that 67% of the time after the open, it continued to drift lower to the end of the close, 67% of the time for an average loss of 1.1%. But here's its range for the day from the open, average to the highs 4%, average to the lows 3.7%. And that today's right now looks like it's indicating around losing about 4.3% during the pre-market. So we'll see where it opens, and that's on 924,000 shares. Here's the range. Here's the range. It's been trading in the pre-market, 33.15, 34.45. So let's see how that works out after the opening. We'll see. Maybe they'll even announce more news after the open. Another stock that we're going to look at is, let's just take a look from downside. downside move, and I think this one popped up at the top, TCDA. This one also had some news. It looks like something with the FDA. Didn't open it up to read it in full, but let's just take a look at that. And not on very heavy volume, actually, 37,000 shares, but let's take a look at historically, its historical down moves. So right now, we see it's indicating down 35%. Let's see how that compares to history. These are the 12 largest, so it's about 5.1%. Here's 12%. So this is a pretty big gap move down. Well, another thing we see is that it tended to go up 58% of the time from the opening, 42% down, but we see that the average, those down moves had some pretty big, so for an average, it's almost break even, negative 0.2%. This is the range from the opening to the high, 5.9%, from the opening to the low, 4.5%. And even coming out after these big down moves, it's 50-50. So it doesn't even look like, going out 1, 2, 3 days, it continues to lose value. It doesn't like really recover in any of those losses moving out of one of those big down days. So this is a really quick scenario from price action perspective after we saw either a big up move or down move in a couple of stocks. And let me just see here, this one was a big down move. We didn't see a press release. So that's how we would look at those. A couple other things that I wanted to take a look at is, let's just see because we're coming into earnings season right now. So let's just take a look at what's coming up for earnings.
While you're there, D, someone wanted to ask about Netflix, where they're saying it's after the market close, I think.
To take a look at Netflix?
Yeah.
Today, okay, sure. So let's take a look at in general what's upcoming. Then we'll go and take a look at Netflix specifically. So I'm going to go in the next 2 weeks here. These are earnings that are upcoming in the next 2 weeks. These are the implied moves in either direction. That's derived from the option straddle. So we see here, this is Charles Schwab expecting a 4.2% up or down move in either direction, and that compares to 4.2% move on average in the last 4 quarters, and 2.9% move on average in the last 12 quarters. And then we see here the high absolute move versus the low. Another one, this is the high, the max, and the low move. Here's Netflix. That's coming up today after the close. So right now, as of yesterday's close, the options were set up for a 10% move in either direction. We'll see what the options will say today after the open, but that compares to, on average, a 4.8% move, an absolute average, with the high move of 10.3% the last 4 quarters and the low move of 2.5. If we go out to last 12 quarters, we see that it had it as high as a 13.5% move after reporting earnings, and this is minimum 1.3%, and this is the average 5.8% versus 4.6% average move. And we could see that in the last 4 quarters, the implied straddle went out on average 9.6% expected move versus today's 10%. So that's kind of in line there. And in the last 12 quarters, 8.7%. So the options right now are implying a little bit higher than it's usual. Let's just take a look here at, since we're on Netflix and we asked about that stock, I'm going to just go here and see what usually happened from a straddle and strangle perspective. So here we see that Netflix, the straddle, overestimated the move 67% of the time in the last 12 quarters. On average, the implied move the market's expectations were 8.7% versus actual of 5.8% move. So you see there's about like almost a 3% differential between the expected versus the actual, and that's from close to close. So see here, long straddle, if you just held the straddle, buying the call and the put, day before, held it to the next day, that was profitable only 33% of the time. And on average, in the last 12 quarters, you would have lost 23% from the long side. The strangle, buying out of the money put, buying them out of the money call, that was a winner 25% of the time in the last 12 quarters for an average loss of 35%. We're going to flip it and say, well, what if we did a credit iron butterfly, which is collecting premium, but we're also buying the wings to protect ourselves from a very violent move. That was a winner 64% of the time for an average of 57% return. Credit iron condor, that's selling and out of the money call, selling and out of the money, selling and out of the money call spread, selling out of the money put spread. So you're still protected by buying those wings, but they're all out of the money. That was a winner 80% of the time, the last 12 quarters, for a 41% average return. Now let's just take really quickly before I'm going to try to get to more questions, because I know people have to go trade at 9:30. Let's just look at from the perspective of implied volatility. What did the implied vols tend to do the day after? So we benchmark it to a 30-day constant maturity. So what did an option with an at the money vol 30 days out, how did the implied volatility do from the day before earnings to the day after? So we see here that on average, that implied volatility dropped by 31% the day after. So the 30-day average implied volatility the day before is 49.7. The day after, the earnings, no matter where the stock moved, the implied volatility on average dropped to 34.3%. If we go out further, 5 days out, it seems like it just held right there, 34.9%. So it just, fell right there and stayed at that level. So here are the last 12 quarters. So we see here that this is yesterday, 2 days before. The average implied volatility for 30-day option was 50.7. It's been as high as 70.4, low as 41.4. Yesterday closed at 68.4. So that's really on that high end. And today we don't know yet because the markets didn't open. So that's just kind of giving you a scenario distribution of implied volatilities and showing you where we are today relative to the historical levels. And here really quickly, if you're just playing an implied volatility, we see here that doing the calendar spread, selling the near-term option and buying an option that's more than 20 days away, but less than 30. So this was a winner 67% of the time for an average of 32% gain. With the put spread, almost the same, 64% of the time with 30% average 30% gain. If you did a diagonal, so we did it a little bit differently. If you bought the at the money near, sold, and out of the money further out, that was only a winner 33% of the time with an average loss of 8%. And then with the put spread, that was only a winner 42% of the time for an average loss of 11%. So this gives you a historical perspective, comparing different strategies and what tended to work. Having said that, Will, let me go to the questions because we have about 10 minutes. If anybody wants to look at a particular stock or have a specific question.
Yeah, MK asked a question right at the start, and I was going to jump in when you were talking about credit iron condors.
Yeah.
He's like, I find some great opportunities on credit iron condors, though being on the negative side, it's very difficult to close the trades. Is that typical? He was asking.
To be able to close the trades.
Yeah, I guess maybe like when he puts them into the market.
Right. Yeah. So there's two ways. So let's just set up in case people don't know what an iron condor is. I'm just going to set it up here on a payout diagram. And when we talk about an iron condor, 23. So the stock's like right around here. So let's just say you sell a put, let's say you buy a call, right? So that's selling a put spread, and then, you know, selling a call, buying a call, selling a call spread. So look, so this is what the payout diagram will look like at expiration. Now, I think the question is, one thing to be careful, you know, that because you're doing so many options, that the spread in that market might be very wide. So we see here 745, 895, that's the spread. If you hit the bid, you know, that's $7.45, but see that midpoint 820, that's a big difference. Whenever you're putting something on, or even trying to take it off, you want to try to get it as close to that midpoint as possible, because you could see here that's already like, you know, 75 cents, right, of value away from the midpoint. That's a lot. That's more than 10% of the value of this. So you always try to, when you're doing it, pay attention to that midpoint and the spread, because that could really eat into your profits and could probably even a lot of times be the difference between a profitable trade and an unprofitable trade. So you could always negotiate, remember, in between. Pay attention to that. So here, when you're doing you know, you have, obviously you have 4 different options here at play. So taking them off, yes, that might be expensive. Look at that spread. One thing is, if it's way deep in the money or somewhere in between here at expiration, right, that if all these options are worthless, you don't have to do anything because they won't get assigned or exercised. If it's way in the money, you don't have to take it off, you know, because it'll just, depending on your broker, right? But those 2 options should offset each other. You know, you'll get assigned on both, you'll buy and sell. But where you have to be careful is when the stock is in between. So see here, and that's what happened to the Robinhood guy who kind of didn't understand. He saw the credit put spread, the stock got right in between his 2 strikes. So what happened was one of the options was worthless, the other one got assigned, so he got the stock put to him, and he had to buy, I think, Amazon, which was like, you know, some crazy number. He thought he lost that money, but really what ended up happening was he got assigned on Amazon and owned Amazon afterwards. But whenever you're in between these, and you don't want to have the stock put to you, you don't intend it, then you would have to take off those legs. And it might not be necessary to take off all 4, because if you're right at expiration or close to it, but you do want to take off where that stock is in between. And when you set it up, be aware of that spread, right? Be aware of where that spread is, how big, and you want to try to negotiate that spread or put a limit order somewhere in between, closer to that midpoint. Hopefully that was helpful with that question.
I think that was super helpful. Peyton is asking about a particular symbol. You all right with taking a look at a symbol?
Sure.
You there?
Yeah. What's the symbol?
DXC.
DXC. This one?
Yep.
Okay. Was there a question with it?
She's just said there was some very unusual option activity. Is there anything you see while you're looking at it?
Well, you know, the total options that traded yesterday were about 3,000, and all I see here is like just looking over here, the biggest expiration month or the most volume was all the way out here, Jan 22nd, which is like elite. And usually, I don't know if that's very unusual. I mean, you know, here's on this 3 put, 800 options traded there. So all I see there's a lot of, you know, a lot of puts traded for an average of 17 cents. That's the one price at 17 cents. Yes.
It sounds like your sound is, it's sounding a little fuzzy. I don't know if you want to refresh and try.
Hearing you right now?
Yeah, it's still real glitchy.
Do you want me, I don't know, how do I refresh it?
Yeah, why don't you, can you refresh or maybe come back in?
You want me to exit and come back in?
Yeah, why don't you exit, come back in?
Okay, all right, let me try doing that. I'm gonna stop sharing for now.
Hey everyone, while Dmitry exits and come back in, let me just, I'm gonna put something on YouTube. Remember, you can always email us with any questions at support@MarketChameleon.com with any questions. The group there is super helpful getting back to you. And when I say group, it's mostly Dmitry, always super helpful at everyone. Also, if you have any symbols, I know we were on DXC. I really could not hear Dima. I don't know if everyone else was able to hear him, but here he comes. He's coming back. Dima, you there? Let's hear that voice.
Hey, how's it now?
Sounds good. Sounds good. All right.
Okay.
It was DX. We lost you. Kind of, you were in and out on DXC. I don't know if you want to go back to that.
Sure. Let me just tell me if you see my screen. Is that, oops. This one, DXC?
Yep.
So did you say DXCM or DXC?
No, you're on the right symbol. DXC.
Okay. So the only thing here that I see is this is where, unless he's looking at a specific strike, I see this DXCM out of the money put, but this is part of a, see here, multi-leg. So this is part of another trade. Let me see if I could find that actually. Let's just look at all the trade activity yesterday. So this will look at yesterday's trade activity, and here's the, you know what? Let me just sort it by biggest quantity. See if there's any like big trade. So September, here's a 200 lot. I mean, I don't think these are like very big unusual trades, but you know, the stock was up 6.6%. So maybe it's just more options trading, but I don't see anything like very, very big or unusual to that sticks out to me, at least right now. Here, the biggest notional trade, 30,000 shares. That's Jan 21, 15 strike, you know, for 404. So I don't see anything that unusual to talk about.
All right, there you go. Mike from Tyler, Texas, one of the great chameleons. I mean, he's been around almost as long as I have. He's asking, when you see this pre-market activity in the stock, how would you look at the options when planning for an open or the trades that day? Is there anything Dmitry Pargamanik looks at?
Yeah, so a couple things that, and it depends, you know, sometimes if you have a position on, or, you know, you're thinking about putting a position on, I look at it from, okay, you know, how are these options, you know, let's get back to it. How are these options potentially going to open? What do I think how things will play out? So we talked about DELL here and what maybe potentially I would be looking for. Sometimes you have an earnings play. So it'll say, okay, well, here's Alcoa, right? That reported earnings today, it's up 3% prior to the open. So what I would look as, if I'm looking at the options, what do I think the stock will, how do I think the stock will behave? So let's just take a look at historical earnings. And history shows that, you know, it's actually had more down moves than up moves at the open. Here we see that it tended to drift lower after the open and coming out of earnings. Here's the range of, you know, on average, it's gone up as high as 3.3% on average and low 4.2%. So if I was just going to play an option during that day, I would use this kind of as my guidance here. So I do see that here, you know, this is up already 3.1%. you know, it's gapped up as high as 5.2%, 7.3%. So it is a little on 4.8%. So it's kind of, you know, on the higher end. I did take a look at this yesterday after the close. I think this was up even more. So maybe now we're seeing some downward pressure. So maybe that's how I would look at it, you know, is selling a call, depending where the implied vols are opening. Do you sell a call spread? Do you think, you know, that there'll be some weight on it? And it looks like the market is also going to be weighing down today. Maybe that's how I would start forming a potential opinion. So let's just take a, you know what, let's take a look at Alcoa real quick. I'm going to just look at it from an earnings perspective. So see here, this is yesterday after the close. It was, the implied move was 6.6%, and as of yesterday, after market, you know, it was up as much as 6.8%. Now we see coming back in. So these bars here, this is the predicted range. The green is the actual move. This one is not including today's. We haven't opened today, so that's after the market close. So, you know, it says over here that compared to, so this is the straddle, you know, what the straddle returned. This is what the long strangle returned. I would look at what the options really opened up at. I'd have to look at the implied volatilities and determine, are they too high, too low? Is that move overdone? Do I think it'll drift lower and maybe have like a small directional bias? So let me just make sure that, let's look at after hours yesterday in Alcoa. So here's Alcoa yesterday. You know, it traded as up 6.8% on almost 1 million shares. So that's what it's done now. It's just coming back in kind of closer to its historicals. Will?
Yeah, I got you, buddy.
Okay. All right. I know it's like the open.
We only have a few minutes left, everyone. You got to get ready for your trading day. Hopefully this was super helpful. Remember to subscribe, like, and we're going to try to do this every day. Is that correct, Dmitry?
Yeah, we're going to try, as long as people find it helpful and interesting. We're going to try to do it every day.
Yeah, just so I remember for tomorrow's show, we did have someone ask about the major tech stocks. Is there anything we see in the options? So maybe we'll go over some Microsoft, Amazon, Tesla, Google. But it's about the bell's about the ring, everybody. So any parting words, Dima?
I know everybody have a great day. Have a good trading day, and hope to see you guys tomorrow.
Stay safe out there, everyone. We'll see you tomorrow. Bye-bye.
Thanks, everyone. Bye.